Quint. We are in conversation with Mr. Prabodh Agrawal, Group CFO of IIFL Holdings. Good morning, sir. Thank you for joining us on Bloomberg Quint. So, a big news coming in for IIFL Holdings. After nearly 23 years of operation as a diversified financial services company, your company has decided to de-merge the business and reorganize the structure. What is the kind of thought process behind it to separate three businesses into three separate listed entities, sir?
So we are dismantling a conglomerate structure. If you see the conglomerate structure for manufacturing companies is being reorganized into individual businesses over the last decade. Several conglomerates have been reorganized. In the financial sector, the conglomerate structure is still accepted because what is believed is that various financial services have some kind of a synergy with other businesses, and therefore it is acceptable to run them under one umbrella. However, what we see is that the regulators, the risk profile, the customer segment, the growth prospects, the management talent required, the capital requirement, etc., are very different for various businesses, although all may be considered as financial services. And therefore, we have decided to reorganize them into three individual businesses. What we believe is that by separating them, we will actually allow them to grow to their full potential. They will not be able to hide, one underperforming business will not be able to hide under another business. We will expose them to full public scrutiny, media, analyst scrutiny, and thereby we believe that they will be able to realize the full potential. Moreover, we believe that each of the business is now of critical size where they can stand on their own.
All right, and sir, how will it affect the liquidity for listed shareholders for all three entities?
So the thing is that as the business grows, and you will see that in fact what will happen is that for shareholders' point of view, each business can attract a different set of investors, people who are more convinced about that business model, and therefore instead of investor having to invest in a conglomerate, they'll be able to focus on individual businesses, whatever they like. There is also some kind of a holding company discount which creeps in this kind of a conglomerate structure. We believe that will be done away with. So over a period of time, we believe there should be good liquidity in each of the stocks.
All right, and when will this be effective? The reorganization will actually take place. How long will it take place, and how many approvals will it go through?
Yeah, so it's a long process. Basically, we have to go through firstly the stock exchanges. We have to go through SEBI, then we have to go through NCLT. We have to take shareholder approval, creditors approval. So all these processes would take about 10 to 12 months.
And sir, talking about numbers, finally, talking about the quarter went by, all three businesses, that is your broking vertical, wealth and asset management, loan segment, has grown substantially. What has led the growth?
So basically, we are a diversified NBFC. The two key drivers for us are home loans and SME loans. We actually focus on very small ticket home loans of size 10 to 12 lakhs. Similarly, we focus on unsecured small ticket SME loans of around 10 to 12 lakhs. Beside these two products, we also have been able to grow our commercial vehicle, gold, and the construction finance business. So there are several drivers of the business. MFI business, the microfinance business, is a small business for us. We acquired a stake in a microfinance company in Bangalore last year. That also has grown very strongly.
And talking about your microfinance business, so what kind of growth outlook are you looking for AUM?
So currently the AUM is small, just under 600 crores. But we have plans to grow now that demonetization effect is behind us and book has stabilized and the environment has stabilized. We believe that we can now significantly grow. The MFI penetration is still very low, and we believe there is a lot of potential in that. So we are looking to aggressively ramp up our branch network. Currently we have 130 branches, but that will be scaled up gradually. We are adding people, and the loan book will also show a growth.
Well, talking about your lending business, sir, what kind of impact is seen on cost of funds due to rising yields? Yields have almost shot up to 7.6%. So how do you plan to intend to pass to the customers, basically?
So currently our cost of fund is about 8.4%. Incrementally, we are borrowing at about 8 to 8.1%. So there has been about 10-20 basis point rise in our cost of fund compared to last quarter. But still we are borrowing at below our average cost, and therefore I would think that our cost of fund would stabilize or would continue to fall over the next 2 or 3 quarters. But all our loans are on a floating rate basis, home loans, SME loans, etc. So we should be able to pass on as and when required. I don't see that happening immediately, but as when our cost of fund, overall average cost of fund begins to rise, we'll be passing it on.
And despite good numbers from the housing finance segment, asset quality has declined on a sequential basis. What is the reason for that?
So, see, our overall asset quality is still very good. Our gross NPAs are 2.1%. Our net NPAs are 1.2%. We have a 64% NPL coverage, including the standard asset provisioning. There has been slippage, quarter-on-quarter slippage in 2 segments. One is the SME and the other is real estate finance. But all of the segments actually have shown a flat or a improvement in their NPL trend. So we still believe that things are under control. We do not see any major, that's of course a major area for focus for us. We are constantly improving our credit appraisal and our credit scoring model, and also a lot of focus on the collection efforts, and therefore we believe that NPAs would remain under control.
And so my last question to you is your final growth outlook for your broking business and wealth management business, because that is the 2 most important business that is contributing to IIFL overall.
Correct. So if you look at our wealth business, the AUM growth was 54% YOY, and our AUM has now reached 1,28,000 crores. So we are among the largest private bankers in the country. We have a client base of around 10,000 HNI families, and we believe there is enough potential for that business to continue growing. We provide entire gamut of private banking services to our clients, including alternate investment funds, the distribution of third-party products, mutual fund, family office, trust, etc. And so we also have an NBFC within the wealth business, which provides great solutions to our HNI clients. And the profitability, as you say, the growth of wealth business has been above the overall growth for the group. So for the latest quarter, profits grew by over 50%, and now we achieved a quarterly profit of around 100 crore PAT. On the capital market side, we have a stable market share of around 4% in the NSE. Cash market volumes have been going up. They were up some 45% YOY in this quarter. And there is a lot of focus on digitization, migrating our customers from physical trading or online trading to more of app-based digital trading. That contributes to about 35% of our overall volume. So we believe, the capital market segment, given the financialization of savings, and that will continue at least for the next 2 or 3 years.
All right, so it was pleasure speaking to you. Thank you for talking to Bloomberg Quint. And for you guys, that was the management of IIFL Holdings, confident about increasing their market share through digitization process. Stay tuned into Bloomberg Quint for more.